Hey everybody, today is Monday, the 17th of October, 2011, and this is Brian Shannon from Alpha Trends. Let's take a look at this market here. We did get some pullback in the area where we were, a lot of people were looking for potential resistance. That is the prior highs and this little band of resistance, basically. It's been the top end of the range that we've been in since August. So we had the failed breakout back there in late August, and from there we had more weakness, and we had the failed breakdown, which this real strong rally has come from. And it's obviously unsustainable for the market to have that type of rally for so long. And finally, we got the beginnings at least of a pullback. Now, as I said over the weekend, it's tough to trust a rally like this. When you're coming off of fresh lows, basically, and that's made a lot of people feel left out, because again, it's very difficult to trust this, and you want to prudently manage risk, and then the market takes off without you. But we did see that it broke that uptrend line. This really defined this channel. It did that kind of about midday, and then I was talking about the potential for support at that 5-day moving average. Now, the 5-day moving average didn't in fact end up being support, but it's just like any moving average, like the 50-day moving average. I don't think that it's something that you want to sell short just because it touches a declining 50-day moving average, or buy it when it touches an advancing 50-day moving average. A lot of people use moving averages for that, but I think their true value is just as a reference point, something to compare price to, and then to look at price action and say, okay, now we're at this level, this 5-day moving average. What we want to do is drill down to a shorter term time frame to see if there's actually evidence in this area at about 120.50, and see if the buyers are actually taking control. And really at 120.50, I think I had mentioned it maybe right around in here as it started coming back up. I don't remember exactly, but what we had there at the time was we had a declining volume weighted average price for the day. So it may sound confusing, but I want to hopefully clear this up a little bit. When it comes to a day trade, I think that you generally want to trade in the direction of the volume weighted average price. If the direction of the volume weighted average price is in the same direction as the 5-day moving average, I think you've got a better chance of trend continuation. And then you start looking at longer term time frames. You look at the 10 and the 20-day moving average, because they often do hold as support. So again, I don't think they should be used as a system, but as a reference point, something to compare price to. And obviously, the market didn't bounce from there. We had the gap lower. Let's just take a look at the 2-minute time frame. We had a little gap lower. The market tried to stabilize and really spent almost the entire session below that volume weighted average price, which means that sellers were in control. It was light volume, and actually the lightest volume I think we've seen since probably about late August. But again, only price pays. We've seen light volume on this rally, and a lot of people have been mentioning that and complaining that it's only on light volume and it's just a short squeeze in that. And it may be true, but nobody knows if we are going to find support at the 50-day moving average down at 117.50. But what we want to look at is, what is the market telling us right now? We've had this incredible rally. The market started to turn sideways in here a little bit. Now it appears to be breaking down. So I think that we're due for a little bit further profit taking. Where that leads us is anyone's guess, but we could take a look at, for instance, some Fibonacci here, and a 38.2% retracement would get us down into about 116.80, which would basically close this gap in here as well. So that looks like a logical place for the market to drop down to, and that would get us down. Actually, 116.80 would be just below the 50-day moving average. We spoke about for the last week and a half about how this market made that V reversal, left a lot of people feeling left out, but we had exceeded the pattern of lower highs, but we hadn't yet had a higher low. So what this pullback is going to do, I think, is really kind of set the tone for the next several weeks, and that is, if we see that the market does find some support, maybe at 116.80, let's say, if we get some support at a lower level and then we begin to move higher again, what we'll have is an important higher low to reference a potential emerging trend for the fourth quarter here. Now, don't think it's going to be simple for this market to move higher, but if we were to see a higher low develop, I think the market could develop the energy to break past this recent range of resistance near 123, and then head up towards the next potential level of 127, where we had prior support. So right now we've got what looks like should be a correction, either price wise as we pull back maybe down towards 117, or we're going to churn sideways a little bit and build that energy to break out. Either way, we'll see. If it pulls back and we just continue to pull back, well then, no harm done, because you don't want to buy the pullback. You want to wait for the evidence that the buyers are actually back in control. The Qs were down 1.5% today. They've had an enormous run, as we know, after failing to break down below that $50 level. And, breaking down in here towards 56 would be a reasonable, healthy pullback, I think. And I shouldn't say breaking down, but we're right on that 5-day moving average in here, and as we saw with the financials last week, that they were kind of hugging that 5-day moving average. And today, of course, we had some earnings from the banks. We have more tomorrow, and let's talk about the financials for a moment. We broke below we broke the 1260 level that we closed basically right on Friday, and then we came down. Now I think that if we break this 1220 with a little bit of vigor, that we could see a deeper pullback. And the way we'd like to see that emerge would be maybe even a gap higher tomorrow that gets sold off and then begins to break down further. It was just a slow, steady grind in these financials, but it was a nice sell-off, and we'll see if breaking down leads us to test some of these other levels, such as about 1180 that was important before. Anyway, back to the Nasdaq, which was, like I said, down 1.5%. We're right on that 5-day moving average. So maybe failed strength in the morning, a pullback below the 5-day moving average, another rally up towards it, and then continue to break down and experience some profit taking. That would be really good for this market. You can see though that the Nasdaq is holding that trend line that basically the SPY broke. And let me just clean all this up. And this is that trend line on the SPY, and the Qs are holding much stronger, obviously, and they've got a lot, of strong components to go for it. The Russell 2000 was down 3% today, so this market always seems to be the one with the bigger percentage movement, and it had, again, a massive rally here. Some pullback is to be expected, and it is good for the potential turnaround that we're seeing here. The lower highs and lower lows are still in existence till we create a higher low. Maybe that's down near 66. Let's let the market tell us what the right thing to do is right now. But with all these markets, we've seen a big rally. Some trend lines have been broken in the SPY and here on the Russell, just kind of breaking that trend line. But if we see some strength that fails, then I think it would be easier to get short with a little bit of conviction for a few days before we can start thinking about the possibility of a bigger turnaround and the creation of that higher low. Semiconductors are really just kind of back and forth here. You really have to trade them on a shorter term time frame if you're going to look at them. And right now, same thing here. We broke some support, and now if we get a lower high, maybe up near about $30.20 or so, and then break down, I think you're safe for a deeper pullback down towards 29 in there. The financials, like we already covered those, so that'll do it for today. Thanks for tuning in.